Great, thank you, Reed. Okay, hopefully everyone can hear me clearly. If the volume on my mic is either too high or too low, please let me know. Otherwise, we'll just get started. Great. Okay, welcome everyone. A bit about us here at Trading Wins before I get into the presentation. We are a group of pro traders with well over 30 years of experience. We're actually real teachers and real traders, and we've been developing our own strategies and systems and teaching people around the globe from complete beginners to experts. Now in today's presentation, I'm going to share with you the exact money management rules that myself and the other traders here use on a regular basis. I'm also going to tell you what you're going to need to apply this system, and then I'm going to show you the actual trade setup. And then when we get to this part in the presentation, I'll ask you to type in a symbol, anything that you're thinking of trading or usually prefer to trade. We can pull up a chart together, analyze it, and see how this system would have performed on that particular security. Okay, and hopefully we'll have enough time to answer all your questions as well. Now, a few poll questions. Just so I know who my target audience is here today, and I can tailor my examples to you specifically. Can you please take a second and let me know if any of you have seen me present at any event or webinar before? Appreciate it. Oh yeah, great. I recognize a few names actually. That's perfect. Okay, a couple more questions. Which market do you prefer to trade most? Is it stocks, options, futures, or Forex? Please take a moment to type that in. Thank you very much. Oh, we have a lot of futures. Options as well. Excellent. Thank you. And one last one here. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active? Please take a moment to type that in, and then we will continue on. A lot of 100 plus. Excellent. Active group. Great. Thanks everyone for doing that. Trading can be very risky if you don't know what you're doing, so please educate yourself first. Do not trade with real money until you are fully ready. Now, on that note, let me show you how we avoid risk in the markets and share with you the money management rules that myself and the others here at Trading Wins use on a regular basis. Rule number one is do not trade with money you can't afford to lose. I'm sure you've heard this a million times, but it is worth repeating. But more importantly, this is about trading with an amount that is small enough that it feels completely insignificant to you. Trading is so much more about how you manage a trade once you're in it than it is about picking the entry point. So once you get into a trade, you need to remain calm and be able to think clearly and manage that position according to your rules. And if you're worried about the amount of money you have in there, you won't be able to do that. So regardless of the dollar amount, you need to trade with an amount that is small enough that it feels completely insignificant to you. Also, never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5%, even 2%. That way you'll still have a very sizable trade on, but will limit your risk considerably. You should never have more than 50% of your account balance active in the market at any one time. And to some of you that may seem odd, may seem like, wow, I'm going to leave half my account just sitting there earning nothing. Well, the reason for it is, number one, there are so many factors that are completely out of our control when it comes to the markets. And any news announcement, any event such as a 9/11 can really drive the markets against us. And so, number one, this is to limit our loss in such a situation. And number two, we'll have money there to put back in the market and make up our loss with. And with what I'm going to show you today, it really wouldn't take that long. Also, you should spread your trades out. We've seen a lot of volatility lately in the markets, and there have been many days where the Dow, the S&P, the NASDAQ have been up huge, and then the very next day it pulls back. Okay, so on a big up day, for example, if you go in and you put on 8-10 trades, and the very next day the market retraces, you're going to be in a big hole right off the start. So you want to avoid that. You want to spread your trades out and only pick the 1 or 2 best trades per time frame. Okay. A couple of other key points that I want you to remember from this presentation is, number one, you will never go broke taking profits, okay? Especially if you're just starting out. You know, as you get more and more experience in the markets, you will learn how to stay in the trade a little longer each time and squeeze out every bit of profit. But until then, get used to banking those profits. Also, remember, trading is not about whether you're right or wrong that's important, but it is all about how much money you make when you're right versus how much money you lose when you're wrong. Okay? Now, what will you need to trade this? Short answer is not on just about any charting platform. Reason being, we are only plotting one 20-period simple moving average, and we don't even need to display how we use it in just a few moments. So you don't need to go on and spend money on new hardware or complicated in this webinar. You already have everything you need. Okay? A few benefits of this system. Number one, it will work on any market: stock, options, futures, forex, globally, any time frame, any price level. We have traded this with $3 stocks. We've traded it with $300, $600 stocks. It works just as well. Okay? Also, you don't need a lot of experience. Any trader or investor can use this very effectively, and I'll show that to you in a while. It is very, very easy and simple to spot on a chart. It has very clear entry and exit points, okay? And it is strong enough to use as a standalone system, or it can be a great complement to whatever you're trading with right now. Now, a bit of background on this strategy. When we first sat down to create this, there were 5 things that we considered must-haves. Okay? Number one, it had to be simple to spot on a chart. We didn't want anything complicated or anything overly time-consuming. Number two, we wanted it to be able to be used on any charting platform, and it certainly can. It had to be easy enough for just about anyone to use, but more importantly, it had to have extremely low risk, and I'll show you exactly how small of a risk you will be taking on each trade. But most importantly, it had to be consistently profitable. We've traded this for many, many years in all different types of market environments, and it has been very consistent throughout. So there are only 2 components to this. Number one, I've already mentioned, the 20-period simple moving average. We have tested this with exponential, with weighted, with different periods. What we found over many, many years of trading is that the 20-period simple moving average works best. Also, you will be looking for engulfing candlestick patterns. Now, many of you might be familiar with them. We use them slightly differently. I'll explain how in a second. But for the benefit of those just starting out, a simple moving average is calculated by adding the closing price of the security for a number of time periods and then dividing this total by the number of time periods, just a straight average. And the engulfing pattern is actually a reversal pattern. It can be bearish or bullish depending on where it appears. If it appears at the end of a downtrend, it's a bullish engulfing pattern. If it appears at the end of an uptrend, it's a bearish engulfing pattern. And I'm going to bring up my live charts now and show you exactly what we look for here. Okay? So hopefully you can see my chart clearly. This is chart of the Qs. And whenever you bring up a chart, there are a couple of things you should immediately look for. One is trend, and the other is momentum. And this is how we look for momentum. Okay? Momentum we judge by the slope in either the bars or the candles here. Okay? And this is where the simple period moving average comes in. Remember I said it's a great visual aid? Well, here's why. Momentum we judge by the slope. So you can have slight momentum in your favor, you can have slightly more momentum in your favor, or you can have very significant momentum in your favor. The higher that slope, the better. It works the same way in a downtrend. You can have slightly downward momentum, you can have slightly more, or you can have very significant downward momentum. Okay? Now, the reason why the 20-period simple moving average is so effective is because if you're measuring the slope off the bars, when you get a retracement or consolidation, you could easily mistake that downward slope for downward momentum. But notice that throughout here, the 20-period simple moving average, the slope remains intact. that helps you understand that this retracement is nothing more than a temporary pullback or consolidation before that next leg higher. Okay? So let me draw out the actual setup we will be looking for. So for a long trade, we're looking for that slope higher, okay, that momentum in our favor, a pullback or consolidation. And it is in this area here that we will be looking for that reversal signal telling us that this retracement is over and that this upward move is going to continue. So what we're going to be looking for in this case for a long trade is a bullish engulfing pattern. And this is what it looks like. Now, there is a difference between the setup and the trigger that actually gets you in the trade. For the purposes of the setup, we are only interested in the bodies of the candles, not the tails or the wicks, okay? Not the thin lines. We're only interested in the bodies. And what you're looking for is for the candle on the right to have, for the body of this candle to completely engulf the body of the candle to the left. Now, they can be at the same level, either the top or the bottom, but they cannot, the candle on the left cannot exceed the body of the candle on the right, okay? This is considered a reversal signal. Now, for your trigger into the trade, you do consider the tails or the wicks, and what you're looking for is a trade above the absolute high of the engulfing bar, so including the tail or wicks. I can't draw that in here, but maybe I could, but you're looking for a trade above the absolute high of that wick, okay? Once you get that, you go long and you put your stop just below the absolute low of that same candle. That way your risk will always be contained to the range of that one bar, okay? Now, for a short trade, it's the exact same thing in the opposite direction. You're looking for momentum lower. The more significant that slope lower, the better. You're looking for some kind of retracement or pullback. And then it is in this area that you're looking for a reversal signal telling you that retracement is over and that that downward move is going to continue. So in this instance, you're looking for a bearish engulfing pattern. Now, the bearish engulfing pattern will look exactly the same as the bullish engulfing pattern, except for one thing. The engulfing bar on the bullish setup should be green, okay? And you ideally want it to close as close to its highs of the day as possible. Your bearish engulfing bar should be red, and ideally, again, you want it to close as close to its lows of that time period as possible. But again, for the setup, you're only looking at the bodies of the candles. And for your entry or your trigger in, you're waiting for a trade above below the absolute high of this candle. If you get in, you go short, and your stop loss goes just above the absolute high of that same candle. Okay? So let's look at an example here. Here we have the Qs, which during this period had nice momentum higher, whether you judge it by the bars or the moving average. Then we get a retracement or a consolidation period, and it's right in this area that we find our reversal signal. I'll zoom in a moment for everyone's benefit. Okay? Right there. So there it is. You see how the green candle, the body of that candle, completely engulfs the body of this candle? Now, you're looking for a trade above the absolute high of this candle. Now, there's two very important rules here to follow. Number one is if, for whatever reason, this stock trades below the low of this candle first, then that trade is disqualified or negated. Okay? That rule alone will save you many, many losses. Okay? What that means is that most of the trades that wouldn't work out with this system are not even losing trades. They're just disqualified trades. Okay? The other rule is that if you get two full bars following that engulfing bar and you still have not traded above the high, then the same thing, you disqualify that trade. Reason being is obviously the momentum isn't as strong as you initially thought. So we want that trade above the high, but we want it within the next 2 bars, and we want it before it ever trades below the low. In this case, we get it on the second bar. Our stop goes just below the low, so our risk is contained to the range of that 1 bar. And then what we notice, sorry, wrong drawing tool. What you will notice also from these examples is that whenever we get triggered into a trade, more often than not, it tends to move in our favor immediately, which is actually a big deal. Remember, when I was going through the money management rules, I mentioned that trading it's a lot more important how you manage a trade once you're in it than it is selecting that entry. You need to remain calm and think clearly. Well, if you're immediately in profit, it's going to be so much easier for you to do that. Okay, this is going to give you not only help you with your confidence in the system, but build confidence in yourself as a trader, which is huge. And I also noticed that most of you trade options. Well, any of you who've traded options know that if you get in a position and it goes against you immediately, that loss in premium is so much more difficult to make up. In other words, you're going to need a much stronger move to the upside to not only make back that loss, but then put you into profit. This way, you'd be in profit right away, which is very, very important. Now let's look at an example on the short side. And I want to show you this chart for a number of reasons. I'm going to zoom into this area. When you have a sustained trend, whether it's up or down, what you're going to notice is that usually you're going to get multiple opportunities to enter. Okay? So you can afford to be selective with this. And remember, the range of that one candle is your risk. So if you see a setup like this that has a very large engulfing bar, okay, that might be too much risk for you. In other words, you have to consider that range. And so if it is, you can feel comfortable in avoiding that trade and waiting for a much more reasonable setup, such as this one. Look at the risk or the range of that one candle here compared to that one. Much different. Okay? Also, you'll see here on the third entry, there's a gap on the entry. Remember, what we're looking for here is a trade below the low of the engulfing bar to get us in the trade. Well, if it gaps, all right, your stop is still going to go above the high of that bar. So now you need to take that into consideration, because the price that you get in would be here on that gap, which means an added risk for you. So if it's a small gap such as this, then that's fine. If it's a huge gap, then again, it'd be way too much risk to be taken. So you want to avoid that trade. Okay? Let's look at a few more. Here's a chart of Baidu. What's nice and clear and easy to spot is that we have a nice upward momentum, right? You get that move higher, you get this pullback, and it's right in this zone that you're looking for, that engulfing pattern right there. You wait for a trade above the high, stop goes just below the low, and off it goes. Okay? Here's beta holdings. Again, when you get a sustained trend, you're typically going to get multiple opportunities. So if you miss one, you can just wait for another one. But again, very easy trades. This is what this is all about. This is about making trading easy on yourself. It can be very complicated. You can add several different indicators to your chart, add a ton of rules, but what we've done here is just pick out the basic technical analysis bits that have been proven to work in all types of markets. And so what we're doing is being patient and waiting for those times where we clearly have momentum in our favor, all right, and we're just jumping on for the ride. Here's a chart of Southwest Airlines. Now this is exactly the kind of chart you want to be trading with. Very clean, just a nice slow grind higher, right? You have that momentum in your favor. You're just waiting for that pullback, that proper reversal signal, okay? And that's it. How easy would that be to manage, right? Here's Nike. Nike, in this example here, gapped up huge on earnings, but right afterwards pulled back significantly. But what's important about this setup is that look at the 20-period moving average. Even throughout the significant pullback, it never did change its slope. It maintained its upward slope. So we knew momentum was still in place. And we see something here on Nike you don't see very often. Double setup, happen one after the other. Okay? But what's really important here is the move that followed it. Okay? Again, you're trading during those times where trend and momentum are in your favor, and that's what makes it easy. Now, let me give you an example of when a trade would be disqualified. Here's a chart of Visa, and during this portion here, we had downward momentum based on the gap lower after earnings. I'm going to zoom in here. So we get this move lower, we get this retracement, and right here we get this beautiful bearish engulfing bar. So we wait for a trade below the low to get us in, but instead it traded above the high first. That's what negated this trade or disqualified this trade. Okay? So then we wait, and now after the next earnings, we had very, very strong momentum. Look at that, it's almost vertical. We get this week to week and a half of consolidation. There's our reversal signal right there. Wait for a trade above the high. Here's a gap, okay, but a small one. And there you go. All right. Now, I know several of you trade futures. Here's the chart of platinum futures. Nothing changes. The settings remain the same. Indicators the same. Rules are the same. All you're looking for is that momentum lower, that pullback. There's your reversal signal. Wait for that trade below the low first, and off it goes. If you missed it, here's another one. There you go. Okay. Notice how most of these not only go in your favor, the momentum is sustained, because that's the key to the system, is the momentum, that slope. The greater that slope, the better. Here's a chart of crude oil. Okay? Taken a major beating this year, but could we have taken advantage of it? Absolutely, in several different areas, all of which would have worked out nicely. And actually, with the exit strategy we use here, you would have exited right in this area here. Okay? Right there would have been your exit. So from, I mean, even if we didn't catch the first one, but in this here, from the $92 area down to the $52 area. For you Forex traders, here's a chart of the Aussie, Czech, Corona. Again, it's the momentum that we're looking for. That's it. Those clearly trending areas. Pullback, reversal signal, and off it goes. Here's one to the downside. But the key is that momentum, or that slope. Here's the New Zealand Canadian dollar. Okay? There's a slope. Okay? There's momentum. Now, of course, hindsight is 20/20. Sure, it's easy, but it's very easy to spot. You see here, we do have upward momentum. All we're waiting for is that pullback in a proper reversal signal. So when you see a chart like this, you want to add it to your watch list and just wait for that signal or that setup, and off you go. Okay? Here's the British pound, US dollar. Same thing. Nice, easy setups. Now, one thing I didn't mention is when you do get a pullback, okay, it doesn't matter whether that pullback ends before the moving average, overlaps the moving average, or goes beyond it. What matters is that at the time of the reversal signal or your trigger into the trade, what matters is that that slope on the 20 is not affected, that it's maintained. If it flattens out, if it happens like it did in this area here, okay, see how it went flat here? Then you've lost momentum. So even though you get a bearish engulfing bar here, you ignore it. Okay? You wait for momentum before taking another trade. Okay? Now, I notice there's a bunch of questions, and we've reached that point in the presentation where you can enter a symbol if you like. I'll bring up the chart. We can analyze it together. I'm going to bring in our coaching coordinator, Raul, to help me out. He can read off the symbols and read off some questions. And I can focus on the charts. Okay. So, Raul?
That's always a pleasure to be here. Thank you so much for letting me come along for this ride. And folks are saying they can't hear me.
Oh, give me a moment. Let me see. Try it now.
I think it was fine.
Huh?
If you can't hear me,
Oh,
let me know.
Al says he can hear you. Great. Let's try that again. Maybe I'll turn the volume up a little.
All right, I hope that's better. Let's start with John, who's first in with SPY.
SPY.
John,
Sure.
glad to have you with us today.
SPYs. Great. So, again, what you're looking for are those periods of momentum. See here on the SPYs right now, you clearly have momentum, okay? And it looks like here we are about to get a pullback. So you want to keep this on your watch list. And ideally, this will pull back to this area here where we have some support that lines up with that moving average, and we'll get a nice reversal, and then we'll be off and running. But that's what you're looking for. So the other thing I want to mention is you see here was a setup here, okay, and it worked out nicely. But this is more of a runaway setup. Ideally, you want to wait for more of a pullback, just so you're not chasing the stock, okay? But you can see here was another one after this pullback here, okay? After this pullback. The pullback doesn't have to be very long. 4 or 5 days is fine, but off it goes. So it works really well.
Brian wants to know about plug, P-L-U-G.
Sure. P-L-U-G. Let's have a look here. I don't really see much, but again, you see, well, there was certainly one here. Okay, more of a runaway. Let me highlight this. This was more of a runaway, but it was one there. Now, this was as well, although, see, this is how you want to use that slope. You see the slope here? It's not overly dramatic, okay? Now, when you get a setup that has a very small engulfing bar, okay, your risk will be very small. So this degree of slope is acceptable. If you get a very large one where you're taking out a risk, then it's not. And certainly if you have a night where you have 2 or 3 different setups, and one of them has a very sharp slope up, and one of them has a gradual one, well, you want to go with the trade that has the very sharp slope. Okay, we'll talk a bit more about that later as well.
We did plug. We're going to do Grub now.
Grub.
That's for Tim. I'll let you guess what they do.
I don't even want to guess.
Restaurant delivery and stuff.
Really?
Yeah.
Okay. So see, here's there is certainly momentum in this chart right now. Okay, there is. You can see it in the slope, whether you're measuring the moving average or the bars. Okay, but look at the chart overall. Okay, very choppy back and forth chart. Okay, so if you're going to trade, this can be very difficult on yourself versus a trade or a chart like Southwest Airlines, where you can pretty much guess where the next direction is here. Nice slow move higher. But let's have a closer look at Grub and see how it would have performed. So here there was a setup in here. Oops. But it was a disqualified setup. Right? So this was one here, but on the second bar, it traded below the low first. It never did trade above the high, okay, first. So once it trades below the low first, you disregard it. Now, it worked out beautifully. It ran sharply higher after that, but the point of this rule is to help you avoid most losing trades, because that's what you want. What you're going to find with this strategy is that in the long run, not only are you going to have many more winners than losers, but you will have much greater winners than the losses, because your loss is always contained to the range of that one bar. Okay, there was one setup here that worked out very nicely, right there. That triggered right away, and it shot lower. Okay.
Tim's asking, does this work on intraday trading charts?
Yes.
And can we show one US dollar Japanese yen?
Okay, let's have a look at USD JPY. All right. So not only does it work very nicely on daily, it'll work on any time frame. Let's look at the hourly, for example. Okay. There was one here. Well, one in there. Let's see where else. Now this portion is pretty choppy. Sorry, let's go further out in this section. I should also mention that if you get, let's see, I was looking for one specifically to show you as an example. I don't see one, but you can, the color of the candle prior to the engulfing bar can be either color. So you can get a green on green here or a red on red setup to the low side. Okay, you certainly can do that as well. All right, let's try the 15-minute here. Okay, let's zoom in a little. Okay, and there's one on the 15-minute right here recently. Okay, there's one here too. Now, again, if the range of that bar is too much for you, too much risk, then avoid it and wait for another setup. They're all over the place. Any others, Ro?
Yes, Al was asking about BBY.
BBY. Any time frame or?
Daily.
Daily, okay. So it could BBY on the daily. Now, when you first start out, it could get confusing. For example, you could spot something like this and think, yeah, I have a bullish engulfing mark because the body of this candle engulfs the body of that candle. But it's not. This is the wrong color. This is a bearish engulfing. You want a bullish engulfing in this direction. Okay? So just take your time with it and make sure you get the direction right. Here was one real nice one in this area here recently. Okay? Now, we've got this pulling back now. BBY, okay, look at this momentum we have. We have a very nice pullback. All we're looking for is that proper setup. So keep BBI on your watch list. It may give you a trigger soon.
Bert was asking about silver on hourly.
Okay, let's look at silver. Silver here. Well, the daily chart had several spots there, but let's look at the hourly. See, there was one in here, but it would not have been valid, okay? Because we had lost momentum on the moving average, all right? Keep an eye on that. Be careful with that. Let's see. Yeah, sometimes you come across an area where you won't get any setups, but let's see if there's any others. Probably was one in this area. Let's see. Was this one close? 725. Yeah. See, these ones are at the exact same level. The body's at the top, so that's a valid one right there. Very nice move.
Harry, Lou, Ruben, Andy, Lee, Danny, I see all your questions. We will do our best to get to them. Vince, I know you need to get back to your presentation.
Yep, I do. I just want to recap. I just want to answer Vladimir's question. He's asking what charting service I'm using. This is Thinkorswim, but again, any charting platform will do. Okay. Now, let me just go back and recap because I know we're limited on time. I've shown you a system that will work on any market: stock options, futures, forex, globally, any time frame, any price level. Okay, you saw how easy it is to spot it, and believe me, after a few days of looking at charts, you'll be picking this up very, very quickly. It is very strong. It's a system strong enough to be a strategy on its own, but can be used as a great add-on to whatever you're using now. But as you saw, a great feature is that it tends to move in your favor right away once it has triggered. And even better, the majority of trades that do not work out with the strategy are not even losers. They're just negated trades. Okay. Now, I see many questions on exits and others. I wish I had time to cover it all. I don't, but we do have a pro class coming up on this strategy on Saturday, March 21st, 1 p.m. to 3 p.m. Eastern. I'll be teaching the class, and what I'm going to show you that day is the full system from entry to exits. I'm going to actually teach you 5 different exit strategies, but concentrate on the one that we use the most. I'm also going to show you a very unique way of adding support and resistance to really increase the accuracy of this and really allow you to separate the very high probability setups from the average setups. I'm also going to teach you 2 Fibonacci tools. One you're going to use for the entries and one you're going to use for the exits. And in addition to that bullish engulfing setup, I'm going to show you 4 different setups. Okay, so the basics of the system are going to remain the same. When you have momentum and you get a pullback, right in that area where you're looking for that reversal signal, in addition to the engulfing setup, I'm going to show you 4 other ones so you can remain very active in the markets. And one of the most popular parts of this class is the second half. I'm going to share my watch list with you. I'm going to show you how I manually search for trades, and together we're going to do a full search and hopefully walk away from that class with several trades to put on that same week so we can all profit from. Okay, the link for this class is tradingwins.com/candle. But before you sign up, let me tell you exactly what you're going to get so you know that it's right for you. Okay, as soon as you sign up, about half hour or so later, afterwards, once the order is fully processed, you will receive an email with a link to a recording of the previous pro class we did. So you don't even have to wait until March 21st to start using this. Okay. Regardless, we're going to save you a seat at the live class, and we're also going to throw in a 30-day membership to our pro service. Now, our pro members receive videos every night from Sunday to Thursday, where we recap what happened in the markets that day, where we think things are going. We review our open positions. We highlight new trades, not just with this setup, but with all the setups we monitor. Okay, and we will send you trade alerts by email for any trade that we take here at Trading Wins. And also, every Thursday morning from 10 to 11 a.m., we have a market chat, and you can come into the room and ask me any trading-related question you like. Those sessions are also recorded, so if you can't make it, you'll receive that recording as a member as well. So together, it's a $691 value, but for anyone on this webinar today, it's just $97. Okay, we really want to give you a look over our shoulders to see what we do here at Trading Wins. Now, the link again is tradingwins.com/candle. Unfortunately, we do have to limit this to 25 people. Reason being, the goal of that class is to answer all your questions and make sure you're walking away from that class being able to trade this system like a pro. So in order for us to get to all the questions, we do need to limit it. The classes are set for 2 hours, but they typically run closer to 3. I think the recording that you're going to receive with this is about 2 hours and 40 or 45 minutes. So again, I'm going to teach you the full system, entry to exits, including the exit strategies, and the one main one we use. I'm going to show you that unique method of plotting support and resistance, teach you the 2 Fibonacci tools, give you 4 additional setups, and together we're going to do a search and look for new trades setting up that coming week. Okay, again, it's tradingwins.com/candle.
Vince, what you've taught today, is this a system that someone can go out and trade without coming to the pro class?
Absolutely, you can. It is absolutely strong enough for you to go out and trade this. The goal of the class is not only to teach you a few of the other necessities when it comes to technical analysis, but really give you the tools you need that when you get several setups, you're going to really be able to tell the difference between the really high probability plays and just the average plays. So
if I were to put you on the spot and say, trading the system as it is versus learning the details of the system would increase your win percentage by how much?
Oh, well over 50%. Absolutely, it will.
Most of our people here trade options. How much of the discussion at the class?
We will discuss options. I'm going to tell you, exactly what kind of expiry you're going to be looking for, how far out you want to go, what kind of delta you should be looking for. I'm going to tell you when you should be looking for a call or a put versus selling credit spreads, for example. The only thing we won't have time for is to get into the more complicated option strategies such as butterfly spreads and iron condors, that sort of thing.
I want to say thanks to Stephanie, Richard, Kimberly, Val, Wayne, Nancy, Joe, another Joe, and Bernie, all for signing up. We're looking forward to seeing you on the 21st. Vince, what's the best reason to attend the class?
Again, there's so much material covered here.
Let me ask you a different question.
Yeah.
How do I know this class is right for me? That's from Kimberly.
Okay, Kimberly, you know what? What I found is if you're here now, you're obviously taking this seriously. Okay? You're obviously serious about making money trading. And so I want to commend you for that. And this course is specifically for you because it is meant for someone who wants to make a consistent living at trading. We focus on the core aspects of technical analysis that have been proven to work in all types of markets. Okay, this isn't something that used to work and now only works some of the time. This is something that's worked for many, many years and will continue to. It's technical analysis at its best, and the classes, we teach you the full system. Just follow the rules. You do very well.
You and I have this discussion all the time. You know, there are a lot of people that are selling things all the time in this industry. Tell me how you judge the value of something.
I always judge it by, you know, how much money I think I can make from it. So can I make that $97 back, or how much can I make? And I can tell you from the, you know, thousands of students we've put through this, the number of emails we get back, people just tell us how much they made from their trades, just from the ones they walked away with from the class alone. It's been fantastic. And think about it, even one option contract or just one lot of shares to make $97 is not very difficult. Again, we're doing this at that price to really give you a glimpse of what we do here and hope that you become part of our team.
Ben just signed up. Ben, thank you so much for that. His question is, if you can recap quickly what happens with the 30-day pro subscription.
Sure. So at the end of 30 days, if you're enjoying the membership, you don't have to do anything. It will automatically renew at $97 a month. But if for whatever reason you'd rather not continue, and before the 30 days are up, just give us a call and we'll put a stop to it.
Just go through these questions. I've got far too many to go through. Lee's asking, do I understand correctly, if I attend the March 21st webinar, it costs me $97?
Yes, that's all it would cost you, and you would get both recordings and the membership.
Franklin's asking, do I need any special software to be able to use the system that you're going to
use? No. And there are plenty of free charting platforms out there that are very good. You don't need to spend more money on this at all.
Last question. Tim, is there really a 25-person limit?
Yes, there is. Unfortunately, we do have to.
There are a lot of wonderful speakers coming up. Yep. It's not that we want you to spend your money with us, but to be able to answer all your questions. I'm just looking at the list now that I could not even get to a tenth of the questions that we have. The 21st, tradingwins.com, excuse me, /candle, 1-888-574-2426 if you want to call us by phone, or info@tradingwins.com. Vince, our time is up.
I just want to say a quick thank you, first of all, to everyone for attending today. I know how valuable your time is. I hope you found value in this. And to Reed and everyone else at Investor Inspiration for having us on. We really do appreciate it. Hopefully you can have us back again. So thank you, everyone, and hope to see you at the class.